We heard the CBK on Friday say that it was in negotiations with the IMF for a $497 million loan to shore up its foreign exchange reserves. We had no immediate impact on the shilling on Friday. What have you made of that possibility where reserves have been below the statutory requirement?
Well, I think it's been below for quite some time. The central bank has been the elephant in the room and has been buying a lot of foreign currency. I think they've actually kept the shilling on the back foot. We would probably be closer to the 78 mark against the dollar if they were not present. So I think on balance, the IMF is giving Kenya a stamp of approval. The size of the loan is just short of $500 million. It's chunky. And I think that's why you saw the shilling strengthen Friday and not sort of follow its normal correlation with the euro, which has been quite weak over the last few sessions.
Of course, as you've highlighted, if agreed on, it would be a boost for the shilling as the CBK won't need to be intervening as much. What are you making of the shilling's outlook for the year that's or the quarter that's still left for us to progress through?
Well, the central bank has been the key mover. I think they took the shilling over 80 pretty much single-handedly. And I personally think, the shilling probably can get up to about the 78 level and be fairly well supported around those levels. If the central bank is going to take this money in from the IMF, I think probably you won't have them in the market as much. And therefore, I can see it strengthening to those levels I was talking about.
Yeah.
But it seems to me this year the central bank has followed a policy where they've been trying to keep the shilling euro rate at a particular spot, and everything has flown from there.
Well, obviously that some of the kind of news we're seeing affecting currency movement right now. In the meantime, on the corporate front, quite a few earnings that have been released. Athi River Mining out with numbers showing 9-month pre-tax profit up 12.6%, revenue up 16%, and earnings per share rising 15% as well. Your overall impressions there?
Well, I think, Athi River Mining is very well run. You're never going to get any surprises coming out of those reports. I would have preferred to have seen slightly higher baseline figures, but I think these are good enough. And I think the real relevant point about Athi River Mining was an interview that Pradeep Padrama, the majority shareholder, gave in Washington, where he indicated he was being courted by a number of Asian cement players. And I think there's been a tremendous amount of activity in that share, which really is not justified by the normal news flow. And I think you've got to look at Pradeep's comments, and clearly there's some activity going on. Someone's positioning themselves in that stock. In
the meantime, we've got the company expecting margins to improve in the cement business with the increase in capacity coming to the fore. And these numbers painting a very different picture to the one PPC painted for us here in South Africa last week, where the theme was excess capacity in an environment where tenders are low, competition is high, and payments where they have come through have been slow as well. So safe to say that the Kenyan market is in stark contrast. Is there any concern about excess capacity over on that end just yet?
No, not at all. I think, there are plenty of new players, but it takes quite a bit of time for the capacity to come on stream. I think, we've got a rising GDP tide. We're at 5%. The region is sort of at the similar level. And I think for now, the cement market is well balanced and there's probably a shortage. So, if I look sort of 24 months out, I think those cement companies that are bulking up are taking the right bet for now. And I think, you've got this whole regional story playing out. You've got a building boom going on. You've got plenty of juice still to go in this sector, I think.
While it's bulking up on that end, Aly Khan, it's planning on spinning off its fertilizer business to focus on increased cement sales over the next 5 years. What have you made of that move, where the diversified nature of the business has really been what's held Athi River Mining in good stead in the past?
Absolutely. Operationally, they're really an alpha management team. And I think what they've proven with this foray into fertilizer is how they can execute to a plan, they can create a business, and they can release value for shareholders. And I think as an investor, investors continue to cheer their ability to execute. And I think that's what they've done here once more. And that's why you have a premium in the price just why you've got such a good premium in the price and why it's rallied about 83% over the last 12 months.
What are you making of current valuations? Would you be a buyer at these levels?
You know, it's in this range of like 162 to 176. If I can get it near 162, I'd definitely look at it. But I think the key story with Athi River is, as per Pradeep's signal, that he's looking at a strategic or all-out sale. And I think that's in the background.
Let's take a look at Newsflow this morning. We had a profit warning being issued by Samir. It's attributed, that warning, to rising raw material prices and obviously that unfavorable exchange rate as well. Your view on Samir?
It's a bifurcated business. It's a business that was originated out of tires. This is a story about that, but it's also retooling itself as a property play via this Samir Business Park on the Mombasa Road. I think clearly, you know, the tire business is commoditized. It's very tough to compete. I'm not sure that Samir has the competitive advantage to compete in that business. I much prefer the real estate play, which I think is a very good play.
Run us through progress at that business park, because we've heard very little about the kind of impact it's had on the bottom line.
We tend to hear very little from his companies, and I think it's actually an investor relations problem that they've got there, and they need to sharpen up on that front. But essentially, they've gone very quiet about it. This was land which they've converted into a business park. I keep passing it every few days. It doesn't seem occupied yet, but it will be. And that whole road has really taken off. And I think they're feeding into a very strong demand curve. So I'm pretty confident over the medium term, this is going to pay off in a big way. At the moment, they're not creating a sense of awareness about how they're unlocking value via this transaction. And they've gone very quiet, as you said.